I please welcome on stage Mr. Debasish Panda, the chairman of IRDAI, and he will be talking about scripting tomorrow. So ladies and gentlemen, a big round of applause for Mr. Panda.
Namaskar, ladies and gentlemen, esteemed guests, industry leaders, distinguished participants. Very good afternoon to all of you. It is with immense pleasure and great honor that I extend my warmest greetings to each one of you who have gathered here today and also those who are joining us virtually. Before I begin my address, I would like to place my sincere appreciation for the Times Group for organizing this grand assembly of minds, perspectives, and aspirations. As we convene under the theme of disruption, development, and diversification, I find it profoundly resonating with the transformative trajectory of India, where the economic as well as the social landscape is evolving with every sunrise. Friends, today's India operates with unparalleled zest and vigor, not merely participating in the global economy, but endeavoring to lead, innovate, and redefine the very essence of progress and development. With the infrastructure and intellect constantly evolving, India pioneers on the world stage as the fastest growing major economy. Our GDP is just not confined to numbers. It is a testament to relentless determinations, fostering a portfolio of passion, ambition, and transformation. Long-term vision fuels every policy and initiative. The strategic leap is being planned over decades. Unhindered by short-term perspectives, our trajectory is steered by the compass of long-term growth, which permeates to the last mile, to the last house, and to the last person. The resilience that India has shown in the face of global headwinds, be it the pandemic or the geopolitical situations, is notable and praiseworthy, and we are all proud to see the consequent global optimism towards India. The CXOs of the world are convinced that it is India's century. India is poised for even further growth. We are the world's 5th largest economy, and going by the projections, will become the 3rd largest very soon. Development is happening at a breakneck speed, catalyzed by the convergence of various factors, including policy reforms, regulatory reforms, infrastructure investments, and technological advancements. The growth of the Indian financial service in the last decade has been phenomenal. Major reforms like the UPI have changed the payment landscape of India. And friends, I must mention that such gigantic payment infrastructure, UPI, is just one piece of the puzzle. The JAM Trinity, the BharatNet, the direct benefit transfers, and various other initiatives have revolutionized the entire financial landscape and empowered citizens living even in the remotest areas. India Stack, Aadhaar, the account aggregator framework, and more are collectively changing the face of financial services. What used to take days before can now be done in seconds. As per a report by ASSOCHAM, India's consumer digital economy is on the roads to be $800 billion by 2030, a 10x growth from 2020. Hence, we are now proudly shifting from bricks to clicks with a fintech adoption rate of 87%, one of the highest in the world. Even Mr. Bill Gates, the founder of Microsoft, has mentioned that no other country has built a more comprehensive digital infrastructure than India, and it can be example for other countries. This is the scale of disruptions we are witnessing. Ladies and gentlemen, India is emerging as the next great economic power, the base of which lies a very robust financial landscape. And the strength of this financial system gets bolstered with the existence of a robust protection ecosystem, and insurance being at the core of it. It not only safeguards individuals and businesses against potential risks, but also fosters confidence, and stability, thus propelling India towards its economic zenith. Speaking of the Indian insurance sector, ladies and gentlemen, it holds significant promise. Currently ranking as the 10th largest globally, it is poised to climb to the 6th position by 2032, according to multiple reports, outpacing its peer economies and rapidly catching up with the developed nations. Demonstrating a sturdy growth, the industry has maintained a compound annual growth of 11% and achieving 14% in the previous financial year, with a premium income of more than rupees 10 lakh crore, which is 120 billion US dollars. With an assets under management exceeding 60 lakh crores of rupees, that is USD 720 billion, the insurance industry also provides employment to more than 6 million people. These numbers are big, no doubt, but at the same time, these carry enormous potential of becoming even bigger, backed on the evolving socio-economic landscape of India. My dear friends, we encompass a fifth of the world's population within India. Such is the diversity that we have multiple markets within one market. There comes multiple pocket sizes and multiple preferences. Our demography is favorable with a majority of young population. The middle class is widening and disposable incomes are rising. This presents an opportune moment to tap into the vast potential. We need to reach 140 crore people, offering protection to them, their loved ones, their businesses, their assets, their properties, while acknowledging the rich diversity that exists in India. A one-size-fits-all approach simply cannot meet the varied needs of our beloved nation. What is the solution? The answer primarily lies in technology, leveraging disruptions that not only drive development but also cater to the diversification needs that exists in India. Today, India is Digital India with over 850 million internet users and 750 million smartphone users and the millennial population mix. Every click, keyboard button press, swipe or tap is generating data. The digital footprints are available, and most importantly, today's customers do not shy away from sharing information in exchange of personalized experiences. Thus, any insurance company which is operating purely on conventional styles will find it difficult to survive against the ones that are predicting customer needs through tech-driven market intelligence and offering the right product through the right channel to the right customer. Today, blockchain-enabled smart contracts have enabled insurance claim settlement within seconds. Information obtained through telematics, wearables is able to rationalize the premiums. Even fraud detection have become more effective with the help of data analytics. AI, ML, big data, IoT are causing disruptions and changing the traditional fabric of the sector. Ladies and gentlemen, insurance, like practically every other business, is being redefined, reshaped around technology and around real-time data and insights. Recognizing the significance of technological disruptions and keeping pace with the relentless innovations in the financial sector, we have created a dedicated InsurTech mission mode team within the IRDAI, that is the regulator, which is working at full throttle to facilitate and enable technological advancements in the insurance sector. To foster innovation and experimentation, the regulatory sandbox has undergone a comprehensive revamp, allowing access 365 days a year, 24/7, compared to the earlier cohort-based half-yearly access. Furthermore, the experimentation period has been extended from 6 to 36 months, providing sufficient time to test and experiment the utility and feasibility of diverse products and processes. Many successful products thereafter have been launched. For example, pay as you drive or pay how you drive have emerged from the regulatory sandbox. Not just that, many Indian insurers today are leveraging AI, ML, blockchain, telematics, wearables, satellite imagery, drones, etc., in pricing, underwriting, and in claim processing. However, the question arises whether all of this is sufficient. Friends, IRDAI's objective extends far beyond establishing mere tech-led insurers. It is driven by the ambition to utilize technology to extend insurance coverage to every corner of India, including the hinterlands and the challenging terrains. The focus is on providing insurance solutions that are customized to the specific needs of the diverse segments of society, addressing regional, economical, and occupational diversities. The goal is to empower customers with choices, not only regarding insurance products, but also in terms of how they access and pay for them. While the extensive use of technology is crucial for achieving these objectives, the aim is to ensure that technology serves as a means, not merely an end in this pursuit. This leads to our grand vision of insurance for all by 2047, wherein every individual is provided with adequate health, adequate life, and adequate property insurance coverage, and every enterprise is supported with an appropriate insurance solution. This overarching objective compels us to introduce to another dimension to today's theme of disruption, development, and diversification, and add democratization, which reflecting the Indian philosophy of development, which is rooted in people and their upliftment. In line with our commitment to democratize insurance, the insurance industry is very passionately working towards creating one of a unique electronic marketplace for buying, selling, servicing, and claim settlement of insurance called the Bima Sugam. This will be a public digital infrastructure and would possibly be the game changer or the UPI moment for the insurance sector. You may ask how. The universalization of insurance would become possible with Bima Sugam, which will provide the reach and a bouquet of insurance services in real time at the doorstep of the customer, the prospect, or the policyholder. The tech-led e-marketplace would transcend geographical boundaries and income disparities. It would host all the necessary information and available offerings at a single place, thereby reducing the information asymmetry. It would be integrated with various data stacks, enabling seamless flow of information, making onboarding, processing, pricing, and underwriting more accurate and personalized. Access of such information would result in more choices and avenues, both for the insurers as well as the consumers, creating a win-win situation. The biggest highlight of the proposed protocol is that it would, of course, democratize insurance by making it available across geographies, across varied income levels, and across diverse sections of the society. It would also become the tech arm for insurance agents, the foot soldiers of insurance, through a plug-and-play model, making them more accessible, making them more productive, and making them more efficient. The assisted sales model of Bima Sugam would enable intermediaries to onboard their customers, sell and service the policies more effectively and efficiently. The digital capabilities would further enhance the reach of insurance agents who normally cater to localized areas, helping them acquire more customers with lesser efforts. All in all, it would empower, enable, uplift, and digitize the entire Indian insurance landscape. Now, just that, we are talking of the Bima Wahaks, a women-centric workforce. You can call them the Bima Didis, who will be the localized women-centric workforce who would add the touch of familiarity in the insurance transaction, as they would belong to the same village, the same taluka, the same district, enhancing trust and confidence. The Bima Didis would be proliferating the proposed Bima Vistar, a simple and affordable benefit-based product with parametric triggers, encompassing basic protection needs of life, personal accident, and property insurance. Furthermore, an attempt is also being made to involve every stakeholder to make inclusive insurance a reality, necessitating a more collaborative approach among the governments, among the regulator, the insurers, and the tech companies. In this direction, a state-level insurance plan has been formulated, wherein each insurer has been entrusted with the responsibility of increasing insurance inclusion in the assigned state or the union territory. The support that we have received from the state governments in this initiative is very encouraging, with many of the states formulating the state-level committees and the district-level committees. Working at the grassroots and providing protection to the most vulnerable would be the key to our vision of universal coverage of insurance before 2047. So the unique Bima Trinity, coupled with the state insurance plan, would not only enhance reach, but also amplify depth of insurance market, scripting a tomorrow which is truly inclusive. However, for success of such advancements, it's equally important to have an enabling regulatory framework that is supportive, that is facilitative, and that is forward-looking. The regulatory architecture should serve as an enabler, fostering growth, while simultaneously maintaining the stability of the sector. Friends, the insurance industry has matured over the last 2 decades of liberalization. The traditional rule-based regulatory framework may not be sufficiently equipped to harness the full potential of the sector, especially in this era of economic and technological advancements. Rather, at times, it may act as a constraint or an obstacle to growth. So keeping this in mind, a 360-degree evaluation of the regulatory framework has been undertaken to check for its agility, relevance, and adaptability. And it was found that many strict boundaries which were affecting the pace of the growth of the industry and stifling growth and innovation, and was also hindering choices for customers. A lot of approvals were required even for launching a simple product. There were a lot of compliance requirements and myriad of returns to be filed, affecting ease of doing business and increasing the compliance cost. The next step was to engage with the stakeholders, and following a consultative and a collaborative approach, critical insights and inputs were received, and thereafter, after multiple consultations, a new framework has been created, which is from a rule-based, we have moved to a principle-based regulatory approach with the build on the pillars of ease of doing business, more avenues for growth, more healthy competition, enabling innovation, and extensive technological adoption while keeping the interest of the policyholder central. Regulatory processes have been streamlined. The spirit of ease of doing business has been placed in the scheme of things. The distribution architecture has been opened. The overall expenses of management has been made flexible. All in all, the boards of the companies have been empowered to take all kinds of such decisions and offer the best possible product and at the best possible prices. We are also moving towards a risk-based capital regime for efficient utilization of capital, and also aligning with the global standards of accounting and reporting. Dedicated mission mode teams are working at full throttle, and we expect the RBC framework, the risk-based capital framework, and the international financial reporting standards to be adopted sometime in the year 2025. A lot of new risk coverages based on the market needs have also been permitted, like the title insurance, the insurance for warehouses, the performance guarantee insurance, surety insurance, and so on and so forth. The data bureau within the insurance sector is also being strengthened for better data analytics so that they could provide better insights for better underwriting. A lot of customer-friendly initiatives have also been undertaken in the last few months for a seamless journey of the customer, particularly in the health segment, and also in other segments, similar efforts are on. It has become very easy for a new investor to enter into the insurance space, provided they come with sound financial standing and they adhere to the fit and proper criteria of the regulator. So if I were to sum up, I would say that the principle-based approach now would result in almost 80 regulations now going away, and we would have just 15 to 20 regulations which will govern the entire insurance sectors. And from about 1,500 odd circulars will come down to 24 circulars, and that is the kind of ease of business that we want to provide to the insurance sector. And knowing fully well that there is huge potential, we are seeing a lot of investments coming to the sector, and I'm happy to inform you that in the last few months we have approved 5 new companies or new entities who have entered into the insurance space, and we see a lot of interest among the investors to enter into the insurance sector. And I'm sure going forward we will certainly see more and more investments and more insurance coverage and more deepening of the insurance inclusion. Our journey is a collective commitment to shape an insurance industry that is aligning perfectly with our vision of insurance for all by 2047. The vision signifies our dedication to make insurance available, accessible, and affordable to every individual and businesses, irrespective of their circumstances. By 2047, we aim to ensure that insurance stands as a steadfast companion on the journey to financial security and resilience for all. This encapsulates the core principles of the insurance sector as a guardian, enabler, and a stabilizer. Together, we can navigate the complex currents of change, ensuring a bright and sustainable future for our financial services, striking a right balance between development and regulation, innovation and security, growth and responsibility, while upholding the highest standards of trust and integrity. I would once again like to thank the Times Group for facilitating this platform, where leaders, thinkers, experts, all have come together, sharing their insights, inspiring each other. By doing so, we collectively contribute to the progress and development of our nation. Thank you very much. Dhanyawad. Namaskar.